Hello, and welcome to Finance House. Today we're talking about an asset so essential, it makes gold and oil look like luxuries. It's the one resource humanity cannot live without. And in recent years, it has quietly become a new frontier for the world's most powerful investors: freshwater. While headlines are filled with tech stocks and crypto, a much older element is capturing the attention of billionaires and global funds. Around the world, rivers are drying up, aquifers are shrinking, and what was once abundant is now scarce and valuable. And as history has taught us, when scarcity meets necessity, a market is born. The logic for some of the world's richest is brutally simple. Whoever controls water controls life, food, and industry. For centuries, land and oil built empires. Now, it might be water's turn. Take a look at the United States. When Bill Gates became the largest private owner of farmland in America, many focused on his interest in sustainable agriculture. But there's another angle. Agricultural land is a proxy for water ownership. In places like Arizona, the groundwater rights attached to a piece of land can be worth more than the soil itself. Gates's investments, made through his firm Cascade Investment, are part of a growing trend. The ultra-wealthy are securing long-term control of water by buying the land right above it. This isn't just an American story. Hedge funds and institutional investors like TIAA have been buying up millions of acres of farmland in South America and Africa. Officially, it's about food production. Unofficially, it's about locking in rights to irrigation and aquifers before governments can tighten the rules. In countries like Chile, where water rights can be traded separately from land, they have become speculative commodities, bought and sold like real estate. The financial world took a major step in 2020 when the Chicago Mercantile Exchange launched the world's first water futures market. Based on California's water prices, it allows investors to speculate on the future cost of water, just like they do with oil or wheat. To some, this was a sign of progress, an efficient way to manage a scarce resource. To others, it was a moral red line. When Wall Street starts trading access to water, what does that mean for the rest of us? Goldman Sachs once called water the petroleum of the next century. JP Morgan, Citigroup, and BlackRock have all published reports identifying water scarcity as both a massive risk and a golden opportunity. There are now entire funds dedicated to blue assets, companies specializing in desalination, water treatment, and infrastructure. These aren't just environmental plays. They are long-term bets that water's value will soar as populations grow and the climate changes. In the corporate world, controlling water means controlling your supply chain. Beverage giants like Coca-Cola and Nestlé have faced heat for bottling operations in drought-stricken areas. But those same operations secure access to high-quality water sources that are becoming increasingly rare. Critics call it the privatization of a public good. Executives call it ensuring supply stability. This race for water is also reshaping geopolitics. Oil-rich but water-poor nations in the Middle East have spent decades buying farmland in water-rich countries like Sudan and Ethiopia. Their strategy is to secure their food supply by owning the means of production and the water rights abroad. Meanwhile, China has built the world's largest dams and water transfer projects. These aren't just incredible feats of engineering, they are acts of resource sovereignty. Controlling rivers like the Mekong gives Beijing leverage over downstream nations like Vietnam and India, creating a new form of power politics defined not by tanks, but by taps. Back in the American West, the Colorado River, once a symbol of abundance, is now so depleted that its reservoirs are at historic lows. This has turned the river into a battleground between states, farmers, and corporations. And you guessed it, investors are getting involved. Hedge funds like Water Asset Management have spent years acquiring water rights in Colorado, positioning themselves to profit as scarcity drives prices sky high. As its founders say, it's a long-term investment in the most important commodity on Earth. The profound irony here is that water, unlike oil, has no substitute. Desalination and recycling can help, but they are incredibly expensive and energy intensive. For most of the world, the water we depend on comes from local rivers and groundwater. Control over those sources, therefore, represents a form of financial and political power unlike any other. Even the tech world is impacted. Giants like Microsoft and Google need millions of gallons of water to cool their massive data centers. They're now investing heavily in water restoration projects, not just for good PR, but to manage risk. A tech company that can secure a stable water supply may not be able to operate in a warming world. Water stewardship has become a form of future-proofing. For investors, this is the quiet revolution of our century. A new class of blue capitalists is emerging, seeing water not just as a resource to protect, but as an asset to own. The World Bank and IMF have even encouraged developing countries to open their water systems to private investment, promising efficiency. But this has sparked a fierce moral debate. Markets can drive efficiency, but water isn't a luxury, it's a human necessity. When a hedge fund in New York profits from a drought in California, something feels fundamentally wrong. Climate change is pouring fuel on this fire. The UN warns that by mid-century, water scarcity could displace hundreds of millions of people and spark conflicts. For investors, this is also a portfolio risk. As traditional assets face instability, water-backed assets, farmland, utilities, infrastructure, look like the ultimate safe haven. They are tangible, essential, and non-replicable. But beneath this cold financial logic lies an uncomfortable truth. The more water becomes a financial instrument, the further it drifts from being a shared human right. From Bolivia to India, water privatization has sparked protests. The story often repeats. Infrastructure improves, but prices rise, and access becomes unequal. Despite the controversy, the financial momentum is unstoppable. Water indexes, water ETFs, water bonds, the language of finance has completely absorbed what was once a public utility. For the ultra-rich, investing in water isn't just about profit, it's about permanence. In a world of digital volatility, water is real. To own it is, in a sense, to own a piece of the future. One thing is certain, water will define the next century's balance of power. The modern world is built on invisible rivers that most of us never think about until they run dry. The billionaires buying land, the funds trading futures, and the nations building dams are all making the same bet, that water scarcity will reshape the global economy. The real question isn't why the rich are buying up water, but what happens when the rest of the world realizes it's running out. Thanks for watching Finance House. If you found this video insightful, please give it a thumbs up and subscribe to our channel for more deep dives into the forces shaping our world. We'll see you in the next one.